Futures are pointing to a higher opening. Good morning. I'm Joe Doe reporting from Wall Street on this Friday, November 1st. Futures are rising as Chinese manufacturing data released overnight suggested that the country's economy is strengthening. China's official purchasing managers index jumped to 51.4 for October, which was the highest mark attained in 18 months. The reading did slightly beat economists' expectations. For a look at earnings this morning, we're going to turn to Nicole Erkin in the newsroom. Good morning, Nicole.
Hi, Joe.
So, Nicole, we have a couple names on tap for this morning. Let's first turn to AIG. They reported earnings yesterday and said its plane leasing business took a $1.1 billion impairment. Was this fuel related? What was going on with the earnings?
Yeah, well, AIG will be listening closely to the conference call this morning. Earnings came in line, but investors were a little disappointed. The stock has had a big run up this year, and actually management went on CNBC yesterday and they suggested they're no longer going to be commenting on some of their aspirational goals. They also only used about 20% of the modest $1 billion buyback. So AIG, a long-term turnaround play, obviously still restructuring in many ways, but we'll have to hear more from management this quarter to see if it can keep going up.
Sure, we'll have to listen in on that earnings call. We'll also turn to First Solar this morning. First Solar reported third quarter profits on power plant sales. Is that right?
Yeah, one analyst, my favorite report, said it's more trick than treat for this quarter. It actually was a poor quality earnings beat, but they had some good manufacturing cost progress. So this has been a very controversial stock. It's very tradable. It has big pops as we're seeing this morning. But in terms of a long-term investment, there are many holes in the story. So I'd be wary right here. And any trader that came in is enjoying a nice day this morning, though.
Well, speaking of a nice day, I came in this morning, Nicole, and I was handed a tote bag from a company that's IPOing this morning, The Container Store. Is this a good look for investors?
Yeah, the IPO market, which we've both talked about, has been very strong. The Container Store looks to be a big one today. We obviously have Twitter and a slew of other names coming next week. So investors are hyped about new names. Obviously, this is a household name. So we'll be looking. It priced at $18 a share. That's the high end of its upwardly revised range of 17 to 18. So demand looks strong. So that will be a big focus this morning.
All right. Thanks so much, Nicole.
Thanks.
Today I have Drew Wilson with me. He is here to talk about this earnings season as we look forward to the fourth quarter. Drew, how are you doing?
I'm doing great. Thank you, Joe.
Good. Well, Drew, how do you think that this earnings season has gone, third quarter?
So third quarter, we're probably about 75% of the way through, and we're seeing a continuation of a trend that we've seen in the last quarter or two, which is generally lackluster revenue growth, but companies being able to turn that revenue growth into some pretty nice earnings per share growth. They're doing that through cost containment and operating more efficiently and buying back shares. So we're seeing a little bit more of that this quarter.
Yeah, and I mean, in terms of the whole discussion of, well, they're beating bottom line estimates but missing top line, are you seeing the same thing?
In terms of estimates, kind of all over the board, but yeah, there's a little bit more misses on the top line and a little bit more upside surprises on the bottom line.
So looking ahead, Drew, a lot of talk is about the Fed taper, and I'm wondering, will the Fed taper have an effect on future earnings?
That's a great question. I've heard the U.S. economy be likened to a QE3 junkie, and there's a lot of talk about what withdrawal will look like. I think we're going to find that, to extend the metaphor, it's more of a psychological addiction than physical addiction. I think that the earnings power of American businesses is less dependent on QE3 than markets fear.
Interesting. So essentially, it's kind of look at the fundamentals and don't expect that just because the Fed begins to taper or expands, that will directly affect every company that these investors might be looking at.
Sure. I mean, if you look at some of the ways that QE3, the transmission mechanisms into the earnings of American businesses, velocity of money is at all-time low. So even though we're getting a lot of money supply in the system, it's not necessarily creating artificial demand. And interest rates, while low and they've benefited businesses, a lot of businesses will continue to acquire and invest even if interest rates go up. So we're generally, we're still optimistic about the earnings power of American businesses.
Well, Drew Wilson of Fenimore Asset Management, thanks so much.
You're welcome. Thank you, Joe.
That's all we have for today. For The Street, have a nice weekend. I'm Joe Doe.